Trigger points are something that is very helpful when we're talking about exits, when we're talking about managing trades. It is a little bit of procedural analysis mixed with technical analysis. So it's a bit of a hybrid unit, right? You have procedural analysis, which is typically the way in which we trade, which triggers are actually exactly that. It's the way in which we manage a trade. So it is part procedural, but it is mixed with technical. So it's technical derivative and procedurally executed. So it's kind of an interesting blend between the two worlds. It's part of a hybrid model where you get into even more advanced knowledge, not only using the way in which we appropriate our trades, but combining that with the actual technicals that tell us, okay, our technicals can appropriate exits or entries, things like that. So it's kind of the step above procedural and technical analysis because it's a hybrid model. It really becomes the kind of almost ultimate form of trading, just because it's mixing the most advanced theories, right? So Pickle's dad was in a short here. So we are going to talk a bit about that and how we would manage that short to understand trigger points here. So I'm not going to look too far in the past. Like if I did, what I would find is I would find a trend that comes from, say, I believe it was here to here, and eventually it gets to this point on the larger time frame. I believe it's something like this on the bigger time frame. So we're not going to. Yep, I know it's this point right here, and it's somewhere on this one right here on the smaller time frame, just as a local trend. So we're not going to go and reinvent the wheel here. We all know how to do that. Rather, we're just going to kind of take this a step forward here. So you'd have your trend like this, which is great, and then you'd have an even more local one, which would be this candle here to this hourly candle right here. I believe this would be an hourly. That's sure what it looks like to me. Yeah, so it is actually. It's the hourly rate here, which hasn't hard broken yet. So I'm just doing a little bit of trend shortcutting there. Just experience shows me where I can put these things and what time frames I can expect them on. So just a little bit of shortcutting to see where these trends are. So last time we talked about trends and did an overview on trends and kind of how we use them interior and exterior wise. So this would be considered interior trends, right? These you're going to get out to this weekly here, and this is a bit of an exterior trend, but really this would be the local exterior trend. I'm sure there's trend here to here and yada 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 yada, and to this point here and some different things, and this would be a local trend. Just to clarify that. This is a local trend affecting this part of the move. So what we're expecting from this trend before we move on is simply just this, something like this piece of the trend, right? Here's the hold level, and that's exactly what's been being held over time. And then I'm sure there's even something a little higher here. So you'd have this hold level gets hit in there, and then this one right here, and so forth down. Actually, this was the untested level, and that's fine. Is now moved to this range here, and then so forth to here and here. So we can just kind of establish our very first. This would kind of be the legacy level of all of this global information here, right? Like this is very local, what we're looking at in terms of May 7th to May 23rd. Very current, of course, and somewhat localized, and even this isn't too local. More local is going to be in these first few candles here. But anyways, it gives us a good balancing point to establish some of what we're going to talk about today. So we're going to work through timeframes here and see that we do have it's the hourly we found this on, right? We do have some information already that we can use with these few trends that we've drawn. So we simply know that Bitcoin has been moving down, and we are looking at this trend to continue its movement down, and this trend out here, and eventually this trend out here, if we get to that point, which I'm not so certain we will. So let's start by developing our other side. So we simply have this, which was a test of this guy right here. Funny enough, this range had been tested. I believe there's something else in here that was tested. We're not gonna dive too much into that because I believe we did that in a previous session. So, next we'd be down in this region somewhere. So this sort of tested right there, which gives us our hold levels in here, which broke down into this range here. So we can kind of define this range as well, and we're going to spend a little bit of time doing that because we do need to know what we're dealing with for trigger points. So very, very first call, we know range is here to something like this. And this one is kind of already tested, which means we're here, but more likely this candle, and so forth and so forth. And which was tested, this here, which is tested, and we've tested this one, I suppose, next, where it stopped, and you figure it's tested, and maybe that's fine. I can test a second time. I'm not too concerned about that. So really, what I want to do is look at the bottom of this range to develop what exactly we can expect from this move. And this is kind of like almost like a legacy expectation here of what we would expect. You have this right here is a pretty untested region, and even going back and seeing this a little further, and if there's anything there, sure would like to see it. Yeah, and there is. You've got this right here. So that's great. It's tested, but that's right there. So you're starting to define your range, right? Like this is tested. This one is not. This one is not. Let's go to the 1 minute, see if there's anything even more defining. This is getting to be kind of the final spot where this move would hold, if it holds, and if it can't hold, then this is kind of where it breaks. So let's definitely spend a few minutes finding that. Okay, now we're getting to the good parts here. Great. So very clear on the chart right here. This is a very, very clear spot where it is. So 82.73 is a very, very clear legacy target. It's going to be our final moment in this trade if we're going to hold up this range of the move. So we can kind of go back to the hourly here. Great level. I love that level. So immediately we can say, okay, from this point here to here, what is our, let's talk about profit cap, right? Like this is our profit cap. So this is kind of our max expectancy, just like we did a profit cap up in this range down to here. Our profit cap was 10% last time because I believe it was 97.20 or something like that. I'm just going to use 97.20. I believe that's what we had. And it was all the way down to here. It was roughly 10% where our profit cap was. So I believe it was this part of the range right here. So we were talking about a 10% profit cap, which it's perfect. It hit. And now we're recreating that same scenario, right? So we're in this kind of profit cap scenario where this is going to be the max of the move. If this level breaks, you're very much going to be down in this range here. So we've defined the ranges that can be a possibility here. We've defined our profit cap, and now we can work inwards from that, right? We've created these exterior moments, just like levels and trends. We've created these exterior moments. Even a profit cap here is kind of an exterior moment because it's going to have interior moments too, right? Like an interior profit cap would be something like this, like, oh, we could go here. Okay, well, when we lose this level, then we're going to go to this level, right? Or something in this range. So this is like range 1 right here, range 2 right here, range 3 down here. So then you kind of have your 3 profit cap. So if you're in this trade right now, say you short right now and your profit cap is here, yeah, you've got a pretty cool and easy 2%, great. And then maybe into this, you've got a 4%. And then maybe into this, you've got like a full 10%. So that's kind of immediate expectation. Almost think of it like scalp expectation, swing expectation, position expectation. Not saying that the longer you're in this move, the more you're going to make. What I'm saying is that you have 3 different kind of time frames that it's going to take to get there. Obviously, one level is going to be hit. It's going to have to collapse. It's going to go into the next range. It's going to have to collapse into its final range, which is going to cause a reaction up, right? Good. We've established some profit caps on this. We've developed the levels that we want to look at. And maybe we need to go and relook at this top side here. Now that I'm looking at this on a smaller time frame, we had this, I believe, on the 4 hour, which really does look like this on the 1 hour. So working down in time frame. So this was the 4 hour, completely unencumbered, which is nice. But then really we want to have it more specified to the exact moment. So we have something like this right here. If we go back to the 4 hour, it's relatively the same level. Like you're relatively the same level there. This right here, which could be target 1, this right here, which could be target short 2, and then possibly you have something even deeper. So something like this looks pretty decent right here. This also looks decent too. This is the backside. So then the choice becomes between backside, front side combination levels here on the top. So then you have, your range up top. So you have your range up top, you have your range below. And then you're going to have more pseudo ranges too, right? Like you're going to have this guy right here, and that was tested there. So then you're right here right now. That's a pretty decent level. It's a untested range is this one here, tested right to the right, and that's tested there. This range is tested once, so you could say that once this breaks right here, whatever this range is, so that's what's testing right now. So this range here on the higher time frame could go after this right here. See, then you have a few different targets above too. So, okay, that's fine. We just want to develop a few different targets on both sides to talk about trigger points. Really, the discussion about trigger points is the piece of work that we do after we've kind of entered this trade. So we're going to enter this trade with trigger points in mind, and we are going to say, okay, we've got our targets. What do we do with our trade? Like, this is a technical analysis part of this, right? Like, this is the TA part of this. I'm not sure why I had that level mark there. I'm going to leave it there. I don't want to get too much into level finding. And it's a common practice that I do where I mark my hold levels. I'll go back into my charts, remark them, see which one makes the most sense. That's common practice, right? Like, even here, I'm looking at this and I would say, oh, like, actually, this looks really good right here. This backside is tested. I think, yeah, this front side is pretty good right here. So I'll commonly go back into my charts just as a heads up. I'll go back into my charts to see what level makes sense and continue to go on. Okay. We're going to rewind this a bit and treat this as if it was a trade that we are in. Okay. So trigger points become the moment where we exit trades. A trigger point is something where we are in a trade. Okay. So we've executed a technical analysis portion, right? We've executed a technical analysis piece and we are saying, okay, procedurally, where does it make sense to either get out of this trade or take profits in this trade, right? So this is the part of procedural analysis where it's kind of execution, right? It's less technical based and more decision making, right? So except in trigger points, it's hybrid, right? It's kind of like the ultimate form where you're combining procedural and technical. You're using what are called trigger points. So let's just use an entry point. So we're going to just say, okay, we entered here on this hold level, and that's fine. You've got a backside hold level here. So we'll take it back to that moment in time. You've got a backside hold level here. You're saying, okay, I want to enter here as a long. Great. The hold level held. You're going to make your uptrend, right? You've got an uptrend. Your hold level is held. This is no longer part of the move. Instead, you have whatever's developing in this move now, right? Like your hold level on this side. So you've got a hold level on this side that you don't want to break below, and you've got a trade that you've entered based on this hold back here. So now you've created a trend. So a trigger point is something where we run through our charts and say, where do we take exits? Okay, so you're going to have different exits, right? You're going to have your holds up top, right? So you're going to be either here or here, depending on how much profits you're in, right? So the first thing you're going to do is you're going to say, okay, what's my profit cap on this trade? Well, okay, let's see. This hold level here, this was hit, so that this is not going to be respected. Okay, so the ranges back here are all broken. This has been hit. This has been hit here. This has been not touched. So you have this level going to be polarized, gapping to this level, and then even I'm going to go to an hourly chart here and say, oh, okay, we're more likely in this piece of the range here, right? So below this and above our previous price. So that's kind of like right here, right? So this looks like a good spot. And if you want to take profits backside, you would measure that, right? You would say, okay, I've entered here on this hold level. And what are my profits to this level? It is 3.8. To this level, it's 4.17. Yeah, I think 3.88 is good. I like 3.8 here. I don't really feel like I need to push the marquee on this one. Most likely it's going to go up a little higher. If I had to pick a level, I'd pick this one personally because I'm a little greedy, but for purposes of profits, which would end up being moved to this level. For purpose of profits, I think it's okay to just take 3.8 here. So I would take 3.75 and set up my short for the next trade. But if you wanted to get really greedy, I think for the purpose of profits, it makes sense to just take the easier exit, especially when you're talking about 3% or something like that, right? So you're in this trade, you've entered right here, you've drawn your trend. This is what's going to hold the move, and this is where it's going to go. So we can delete this one. So what do your trigger points become? Your trigger points become either targets or areas where you exit a trade. So you would say, what's your trigger on this trade? The hold or the trend, right? Like that's the way I would verbally communicate it. So if you guys knew trigger points, I would say, okay, what's your trigger on this trade? Where's your trigger? And you'd say, okay, trend and target. Those are my triggers. Okay, so those are both trigger points. So you would say, okay, I've got two trigger targets and trend, right? What's your triggers? Two holds and trend. Oh, okay, two holds. So then I would instantly know, okay, you've profit capped this move. You've profit capped it to here and to here. So you've got two trigger points on top, two holds and your trend. So what that means is you're either going to exit here and look for the re-entry without breaking this, right? Now, this is a little bit of technical analysis. This isn't the definition of trigger points. The definition of trigger points is where we exit trades. What triggers an exit, right? So what could trigger an exit? I guess we're stepping a little too far ahead. What could trigger an exit is you go and you break this trend. So you close this trend, you get out of the trade and profits, because as time goes on, this trend is only going to go up, right? So as long as you're holding this trend, you can just simply stay in this trade. And one of your trigger points, you can just say, okay, you know what? I've entered here. There's no money lost if we break trend because I simply get out for a neutral sum trade. There's no profits, no losses. Yeah, maybe I missed the trigger up top. Maybe it went here, but I was like, okay, I want to exit on trend break, and it came straight down, and you exited here. Fine, you can do that on trades. It just becomes more of a position trade, right? Or not a scalp. Scalps are more enter a hold level, take an exit, re-enter another hold level, take an exit, right? But those doesn't mean they're not trigger points. Trigger points are simply where we exit trades. So like a really, really smart one is trend, because this trend, until this move is just going to keep moving up until this trend breaks. So hopefully I'm right about that, and presumably I should be. But this will, at a minimum, even if I'm wrong, even if it breaks right here, before hitting this target, even if it breaks, you're still in profits. It's just not as much as you could make. But that's the whole point about triggers, is that hitting a target is always going to be maximum profits. So hitting a hold level target will be maximum profits. Breaking a trend, again, is more treating this thing like a position trade, or treating this thing like a swing trade, okay? Because you could theoretically hit this hold level right here, right? Which is exactly what you did here. And then go straight up before, slowly coming down to this. And then you exited here because you broke this before moving down, right? So you could, again, you can treat this trade in two different manners, like where your triggers. While your hold is a trigger, that's where you exit, and your trend is a trigger. So when we look at this, we have to start combining what a profit cap looks like, where the maximum possibility this trade could go. Not only the kind of maximum possibility where this trade could go, but how we want to manage the trade. So we're going to go forward a few candles here. We've entered our trade. Great. Target one is hit. How much did we make? Oh, we made 1.2% relatively quickly. And then this is one trigger point, because it is an exit. Like, it's triggering us to exit the trade, right? So it's a trigger point to get back in the trade down on the hold level, right? But we have the safeguard of this trend, right? So we're going to go forward a bit. Got re-entry on. I'm assuming that maybe this was a backside on a different time frame. It's fine. We're not gonna go and get too crazy with this, right? Okay, you break over this. This is obviously polarized. This is exactly what we talked about. Once this level gets hit, this is polarized to this point, which is just going to go into a higher range. So let's say we didn't take this exit right here. Let's say we didn't take this exit. Okay, we're going to work with two scenarios. Scenario one, we did take the exit. Scenario two, we didn't. So scenario one, we already made 1% and we got back in the trade. So now we're looking at another 3.6. We made 1.2, we're looking at another 3.6, okay? For this example, I'm going to say 3.28. Again, I would take this level, but I would be using also other trigger points, more interior pieces of this move, such as an even more aggressive trend like this, to see, okay, I'm in this trade, what, the balance between taking 3.2, 3.6, or breaking this trend. So there's also an interior balance there. But we're going to work with two assumptions here. Assumption one is that we've done two trades. Assumption one is that we're still in the original trade back from here. So in scenario one, we are still in this original trade back from here. You can start making more trigger points to say, okay, I want to be in this trade from here to here. So once this trend breaks, and we're just going to make sure there's nothing a little higher on the hourly. There's not. It would really be this point here to here. There's another trigger point, right? We're in this trade and we're even higher in profits. We're in this trade and we're even higher in profits. 1 second here. Just going to close out my Discord for a few moments. People are starting to bother me. We are in this trade here, right, from this point, and we can exit this trade. We're still in profits in scenario one right here. We're still in profits from this trade here until we break this trend. And if we wanted to stay in this trend trade even longer, we could simply just stay in it. Breaks here, we can trigger out right there, or we could stay in the longer trade here and do a trigger exit there. Again, this is going to be a dictation between what are you trying to do with the trade? Are you trying to go for a longer trade with larger profits? So I want you guys to think back to this trade back here where we said, okay, we've got 2%, 4%, 10%, right? This is the same thing. It's like, okay, the longer this trade is going on, the more you're going to make, which means you have to use less localized trigger points. So a localized trigger point would be something like this extreme one right here, where you're saying, I want to reach this target, but I will exit if I break this. Because again, it's your trigger point. Because once you start to lose that move, once you start to lose whatever trends are starting to bring you there, you're going to go back and test lower parts of the range. Like that's the whole point of trigger points and trends, is that once you lose a trend, you start attacking the next range down, right? So you have a trend is created. If trend is respected, you're moving the same direction, right? Kind of like common sense. That trend is broken. This trend is broken. It's going to attack a lower range just by default. It's going to sink back to a hold level on a higher time frame, or it's going to just go after the next range if it's polarized and that trend is the last thing holding it up.